Hey, welcome to the Closing Beat, everybody. Happy Monday. Hope you're having a great day here so far today. Got a busy week ahead of us here. Hope you're ready. Was supposed to be out of town later this week, but I'm sending the family instead because we got a really busy week here. So let's get started. We're financial advisors here with Jazz Wealth. We just kind of focus on the markets on a daily basis just to keep you updated on what's going on. We're not active traders. We're not active investors. We just like to kind of keep everybody updated. The good, the bad, and the ugly, what's everybody focused on, and what you could be focused on as well. And so we come to you every day with this show. Hopefully you'll keep us in mind if you need any help with your retirement accounts, or maybe you're working with somebody and just not getting the help that you like, or you want someone to teach you along the way. That's what we're here for. We're also playing a game. It's called Guess the Dow. You go to the website, bottom right-hand corner of your screen, take your guess. Where do you think the Dow will close next week? Closest without going over, we'll send you $100. Our winner last week was Albert. We just got a response from him with their address, so we'll be sending out that $100 gift card. They were not a client. You don't have to be a client to play. We'll send you a $100 gift card, and if you are a customer, we can credit your account if you'd like, or we can send you the gift card, whatever you like. We also have a class coming up this week, Thursday. It'll be our monthly portfolio review. That's our chance to kind of talk to just our customers and let them know what did we do, what adjustments have been made in any of the funds. We publish all the funds on our website, jazzwealth.com, but it's our chance to give them an update, and then we have some really cool, like, deep dive, sort of geeky studies that we're going to do, and it's always so weird to do those studies, by the way, because it takes me 2 minutes to share it with you, and it's like, oh, that took us 10 hours to put that together. But I like sharing that information, and a lot of it stems from questions that I get from customers. So that'll be this Thursday evening, 8 o'clock, and email invites will go out, of course, on the day of. All right, let's get started. The Dow was higher by 28, S&P lost 4, and the Nasdaq was lower by 36. Like I said, we got a busy week here. The Dow, for the most part, let's just hop over here. There you go. This is the dojo, by the way. All of our customers get a chance to go in there and play around if they like. The Dow was a little bit higher on the day, and most of that was because that's not going to do anything. Oh boy, he's rusty. That was a lot of, in part, to 3M recovering a little bit, got 1.6% on the move there. And then Intel had an early morning reversal. If you happen to follow the intraday charts, first thing this morning, it just sold off real quick and then real quickly started to recover right around that 10 o'clock Eastern time period, finished the day higher by about 2%. If you have no idea what I'm talking about and you're one of our customers, go into the dojo and click on the video library. It's an option on your menu there, and then just sort by wine and wealth here. These are all of our private classes for customers. You just scroll down a little bit, or you can search by just typing candlesticks. We got 3 different classes just to kind of cover what you see on here. You don't have to learn it if you don't want to, but just kind of a cool way to get in touch with things, as well as other classes that we offer there as well. The Nasdaq was a little bit lower on the day, and that was mostly just because of the big tech names. If you look at names like Amazon, you got Amazon lower on the day, back down to the 50-day moving average after their whole earnings missed there last week, so a little bit of pressure in the short term. Facebook also with a tiny little drop today, pulling back towards the 50-day moving average, but not quite there. Just another name weighing on the Nasdaq. Netflix, we've been following that one all last week there. Talking about this one taking a little bit of a pause at the 200-day moving average. It's known resistance. Everybody and their mother that looks at charts recognizes the same exact area. And like I always say, it doesn't matter what you think. It matters what other people are going to do. That's what you want to learn if you're more of an active person. But anyways, that one held back the Nasdaq a little bit. And then Starbucks, great earnings the other day, blasted off to new highs. It just had a small pullback today. That put a little bit of pressure on everything as well. As far as the S&P 500 goes, you're just sitting there, right? Got fresh new highs last week, and we're just sitting here at these new highs. Maybe it's not loading there for a second. That's okay. And so here's what we got. You have the Fed. The Fed's going to make their deal on Wednesday, right? They'll announce the rate decision. Highly anticipated that they're going to cut by 25 basis points or a quarter point. 22% chance they cut by 50 basis points, so nobody's really baking that in there as well. And the real focus is going to be on what they say going forward in regards to rates. Like, what are their plans? Are they going to stay sort of easing in this new way, or are they just doing this as like they were calling on TV, an insurance cut, just to make sure we got the right footing for the economy? And so we'll see. That's going to be the focus. If they don't happen to mention anything like that, a lot of people think, okay, you're going to see that we've already priced in the rate cut, meaning the markets have already responded to a belief that the Fed is going to cut rates. And once they announce that they cut rates, if they don't give us any juice, any excitement, feed the kids some sugar, then people are going to say, okay, they cut the rates. I can sell and take my profits. So a lot of people are kind of expecting that. Now, you had Janet Yellen today. come out and essentially give the green light to old Powell there, the current Fed president. They gave him the green light, or essentially like a little bit of cover for him to do this, because the issue is President Trump's been beating him down to cut rates. So the Fed doesn't want to be seen as an entity that can be manipulated. However, if they don't cut rates, then you've got President Trump that could just get louder and louder and go, what's the Fed even doing? Let's try to get this done with. Let's end this whole thing. We don't need them. He's said that before. So you have that sort of thing coming up. So the Fed's kind of stuck in this place here. Brilliant for Miss Janet Yellen to come out today, the former Fed president, and say, she actually said, her words were, if it were me, I would likely cut a bit. So using technical terms there for you. So she essentially, as a former federal Fed president, kind of gets to, put that out ahead of time going, yeah, irrespective of everything else, I'd probably still cut rates as well. We'll see. Wednesday's the big day. We also got Chinese trade talks going on right now. Not a lot of news on that one today because this is the busiest week of earnings, right? You got 155 names in the S&P reporting earnings, and you got 7 Dow names reporting this week. So hold on tight, right? Because there's a lot going on here. Speaking of earnings, let's go on over to the charts here and we'll look at Beyond Meats. They were the ones that everybody focused on here after hours. Beyond Meats lost about 5% on the day. They reported their earnings after the close. They lost 24 cents. We were expecting them to lose 8 cents, so a bigger loss than expected. Revenue came in at $67 million, and we still had a loss of 24 cents. We were expecting them to lose 8 cents on $52.7 million. So they had more revenue coming in, still showed a loss overall. A lot of people initially were like, it's okay, it's a growing company. The shares were like mixed, right? Up 2-3%, then they came back a little bit, up 2-3%. Well, then the company about 10 minutes later said, also, we forgot to mention, we're going to sell 3 million shares. And stock fell 10%, like instantly. So I believe right now it's hovering around that 8 to 10% area. That puts it back towards the $200 mark, maybe a touch lower than that when I last checked there. So pretty negative there for Beyond Meats. Remember, we covered this last week. People are valuing this company currently bigger than Harley-Davidson and Alaska Airlines combined, right? So this one company, a food company, is bigger than those two companies combined, or it's bigger than TripAdvisor and Macy's combined. Macy's has 130,000 employees. We went through this. American Airlines, it's bigger than American Airlines, and they have 128,000 employees. So, if the stock took a little bit of a break there, you'd probably be okay with that, right? So a little bit lower, at least as of now. All right, sector-wise, last week we had the Russell 2000 play the game a little bit. I'm going to just go like this, and we'll zoom in a little bit, try to get some spacing here. The Russell 2000, big blast-off day early in the week, took a break the next day, and immediately reversed that, continuing the choppy mess in here. However, still in that bullish stance in the short term, so I'm actually kind of excited about the Russell. It was your biggest mover last week because of that. Are we finally getting something here with the Russell? We'll see. Utilities, that was your biggest loser last week in terms of range, from high to low. It was your biggest loser. It only lost 0.65%, so not a big deal. Today it was a little bit higher on the lower rates. Rates came down just a little bit ahead of the Fed news there. You got XLC, that's holding near highs. That was your biggest mover last week because of the earnings in Alphabet and because of the earnings initially in Facebook. And so that's the communication services sector. It was the best performing sector last week, gained 4.3%, so you can kind of see it there. Just starting off the week a little bit quiet, and it'd be okay if everything was a little bit quiet this week until the Fed makes their decision. That would be totally normal. The semiconductors holding above this holding above the prior highs, I should say. So you've got the semiconductors up above these highs. We talked about best case scenario last week. If they did hold up here and chopped around sideways, made no real progress for a while, that would force the bulls who missed this last rally to go ahead and dive into there. So far, that's what you got going on there. If it pulls back a little bit, it's not the end of the world. It's just if you could pick the most ideal scenario, that's kind of where it's at. Let's go over to financials here real quick. The XLF, that was your second best performer, 2.68%. The financials getting better and better and better. For months now, we've been saying this is an undervalued area of the market, and money is starting to move into it little by little. The volume is getting more and more consistent there, so that's a good thing there. And if we drill down into all these little groups inside the S&P, you've got regional banks. That was your best performing group in the S&P, gaining 3.83%. It was your biggest mover, by the way, also. So another good sign for financials. Even though it started this week with a little bit of a pullback, still a good sign. What's not a good sign? Your oil explorers. This is your most oversold group in the S&P 500. So you got the index is the S&P 500. You got the sector, which are the 11 sectors that we go through every day. And then if you drill down further and go into those groups, that's what I'm talking about. So hit new 52-week lows here today. It, again, is the most oversold area. In fact, all of the oil-related things, the different groups inside of them, they're all oversold here in the short term and midterm as well. I want to point out EWW, which I don't think I put on here. This is Mexico, by the way. EWW is an ETF, plays Mexico. It had a little spike today, caught the radar. Everybody was looking at that one. Comments from the Mexican president that they want to cut rates too. They want their economy to be stronger. And hey, if the U.S. is going to cut rates, we're going to go ahead and do the same thing. So a lot of positive comments from the the president of Mexico, and he did it in a way that was supportive of the Fed. He didn't hit the Mexican federal bank. He did it in a way that was like, look, I trust them. They're going to do what's right. I'd like to see rates lower. It was just very democratic about it, I guess. I don't know. We'll see what happens there. Other than that, you got a pretty much a muted day, we'll say. A lot of things above or below 0.5%, right? Just right in that mix there. Not a lot going on. Home builders pulled back here just a little bit. That continues to struggle. We've been talking about this uptrend here in the short term, potentially breaking. You don't like to see that today. You want to see it start to bounce right away if you own the home builders there, if that's your focus. All right, let's go to individual stocks. In the S&P 500, LKQ was your biggest mover last week, and also moving above this range. If you like bottom picking, there's a big stamp by the bulls, right? The bulls coming in and making their mark in the short term. That is not, sure there's some short covering in there, but that is not a fluke. Those are buyers coming in and taking big shots on this stock here. And so that was your biggest mover last week. Anything auto-related was weak last week. It was at the bottom of the list in terms of worst performers. You got Ford Motor. They reported earnings there. But I'm going further and saying even advanced auto parts in that category, those were really strong for a while. They're pulling back still. O'Reilly Auto Parts, anything related to that, although they had a rough week. Well, actually, this one's recovering a little bit today. Not a bad day. But anything in that category, Goodyear Tires related to cars, of course, earnings, pushing lower on the day as well again today. Well, we don't have to mention Tesla. We know what happened to Tesla the other day as well. So still that theme, right? Anything from last week related to autos, very much weak. We mentioned 3M. I just got it on my list because I know someone in here was making comments on it on our YouTube channel, so I want to follow up with it there. A little bit of a fight back here today. Point out Uber, speaking of the car areas, you got Uber lower on the day. There's a report they're going to let go of 400 marketing employees. It's not official because it wasn't supposed to be talked about. Somebody let the cat out of the bag there, but down 1.4%. And then Lyft, Lyft losing their COO. Remember, he came from Apple. I believe he came from Apple, and he's already leaving. So that stock taking a little bit of a hit here in the short term as well. Oh, speaking of Tesla, if you like that kind of news, so if you have a Tesla, you're going to be able to watch Netflix and stuff on the dashboard there as soon as next month. So they're like, hey, you're going to be able to watch TV on your Tesla, be able to stream right to it. They're going to announce that, I think, next month. And the sort of warning there was, well, only when the car's parked, right? And they're like, you can't hack that. But like only when the car is parked, that's what is going to happen there. And Netflix, the CEO has another sell. So he's got these, it's a regular selling of his shares. It's not like he's sneaking out or running away or anything, but he sells another $17 million worth of shares. And he's now over $130 million just this year that he sold in company shares for himself. That's pretty impressive. And I would say the brother can't go out and buy like a good webcam. Have you ever watched Netflix, their earnings conference call? It's done on like, an old flip phone or something. Horrible audio, horrible video quality. I just kind of think, man, you put $130 million in your pocket, go to Best Buy, get yourself a little $69 webcam. They're cheap. I got a bunch of them. He could stop by here. I got a bunch of them for him. Anyways, let's move on here. New breakouts today. I know a lot of you like these new breakouts. You got Echo Labs, ECL is the symbol there, new 52-week high. Careful though, if we zoom out here, you can just see really strong. It's had a great run. In the short term here, everybody's focused on this little breakout. It's a great technical pattern. However, if you're an investor in the stock, realize that this is in the top 20% from a valuation standpoint of the most expensive stocks in this category here from a trailing PE perspective. So just be a little careful there. Hasbro, that hit new highs here as well, also extended in the short and long term. So look, I mean, you can see it's had a great run, not something that most people would say, hey, after watching this thing rally like that, I'd like to dive in too. So it's extremely overbought there, just a warning sign, although it did hit 52-week highs today. Disney continuing higher. This is on my list because I know someone asked about this last week saying, hey, it pulled back. Should I be worried? This is the normal breathing. So I'm making the exact same comments. We're just making them back then. We're making them here. Normal breathing of an uptrend. The pull back and the rally and a pull back and a rally. Totally normal there. And then in the utility space, you have a couple names here that did pretty good today. A little breakout here in First Energy. And it closed near highs. Remember, we've had comments on that, talking about stocks that close near highs. And then you have NiSource. We can get that up here. Same picture, same sort of general look there. So not too bad there with your 52-week high list. If we can look at the 52-week low list, anybody want to guess? Anybody want to guess who's on the list? You probably don't even have to guess, right? It's the same names. They're actually all in the oil space here today. Two of them we've been talking about every day. Cimarex, XEC hitting new lows today. That's unfortunate. Southwestern Energy is the other one that's just rapidly approaching $0. That one's hitting 52-week lows as well. You had Apache in the 52-week low mix today. Again, oil and energy. New lows there. And then Cabot Oil. This one hit 52-week lows on Friday, I believe. Yeah, Friday as well as Thursday and now also Monday. So if that helps you there. All right, I kind of breezed through a lot of that stuff here. Let me pull this guy up here for you. We've got earnings tomorrow. Apple's the big focus. So like I said, don't go anywhere because you probably want to see what Apple does. But in the morning, you got a lot of the drug stocks, healthcare stocks. This is kind of their day tomorrow. You got HCA, Eli Lilly, Merck, Pfizer, and Gilead and Amgen, all in the kind of similar space there. In the morning, you've got MasterCard and Philip Morris. That'll get some attention. Procter & Gamble also in the morning. And then in the evening, of course, Apple and Mondelez. They make Oreos. Very good Oreos, by the way. We also have earnings coming out tomorrow. Consumer confidence. Economic news. Consumer confidence will be the number that everybody's focused on there in the morning. I did it, man. We covered a lot. And it's just like I make this sheet every day. I post it on Instagram one day just to kind of keep me on track. And it's filled up. I mean, that's everything filled up there. So a busy day. It's going to be a busy week. I'll take your questions now on our YouTube channel. If you happen to have any questions, I say on our YouTube channel because we're live on Roku as well. So some people may want to come over here and comment to us. If you'd like, I'll do my best to answer your questions. You like that. So your AT&T's finally doing something. Great reversal, by the way. That's what you like to see if you're a bull, right? So you got a sell-off there, a little bit of a pulling off of the Band-Aid, if you will. So a little weak there. You didn't have to wait too long. And then that V-shaped bottom, always a good sign there. I think it'd be totally okay if it stopped here for the rest of the week and waited for the Fed and see what happens. But you're very happy with that if you happen to own the stock. Yep. There you go. Any thoughts on AMD and the earnings there? So I don't expect you to see much until the company reports their earnings, right? It's kind of like that, well, let's just wait and sit back and see what happens kind of thing. It'll be tomorrow after hours. Did I say it? My list is a little bit off here. There may be so many I didn't put them on the list. They'll report tomorrow. Expecting 8 cents a share in earnings. Overall revenue is expected, I believe, 1.5 billion. That's a son of a gun. That's a billion. It is not known for being positive the day of earnings or the day after earnings. So they'll report tomorrow after the close, meaning Wednesday. It's not known for being positive. It's actually only positive the next day, 32% of the time. So, whether they beat earnings, whether they miss earnings, you got to expect that there could be some downside there. It's a highly volatile stock around earnings. So hope that helps in just a little bit of time that I had to help you there. Conventional wisdom would say that Apple sales get hurt by their 30% exposure to China. Does services? Services been growing now. I wouldn't discount services. Also, there was a report today that the iPhone model that they're going to release in 2020 will in fact support 5G, when before we weren't expecting that. It was like right on the 50-50 line whether they're going to be able to do it. So, it puts a little bit of a question mark on the earnings. It makes it exciting, I guess. Cool. Yeah. So, any thoughts on the TTD, big announcement Friday, Department of Amazon Publisher Services pulled back again on Friday? Well, so it was a big boost there on Friday, right? So you have that big blast off to highs there. If you're a short-term trader, you don't like that, what happened in there. You have people spent the whole weekend digesting that news to kind of see what's really going to be involved with this deal, and a lot of people discounting that one. So you don't like to see an immediate reversal like that. That's to me is a negative there. Is there a way to see intraday when sector rotation is taking place, like watching ETFs? You can watch 5-minute charts. Doesn't always happen. Like, it's not such an obvious, move on the day. There have been days where you've seen money move from bonds over back to equities, into the S&P and into the Nasdaq especially. That's a little more difficult to spot, but yeah, you could use like 5-minute charts if you really want to zoom in. I like doing it just because I just watch anyways. Thoughts on the cloud tech and security is done well, right? Software as a service as a whole is done really well. It's the best performing area of the tech space this year. So even though, you see what the other ones are doing, but software as a service, and that, of course, would include your Zoom and Twilio and things like that. What are the qualifications for opening up a Jazz Wealth account? U.S. citizen or resident alien, and just have a need, right? Don't just open an account just to put money in and see what happens. You got to have a need or a goal. I'll work with you on that one, but that's really it. If you're going to open an IRA or a Roth IRA, then there's the IRS qualifications, which I can't help you with, but you got to have a job, you got to be earning money, things like that. Thoughts on the Barron's article about the potential software stock bubble, only because of the recent growth, right? So Barron's wasn't saying they think that this is bubble was a bad word, but they're not saying that this is the end of the end. They're just saying, hey, that's been a rapid sort of move in all those little subcategories there. And so really they were just kind of saying, hey, in a short term to mid-term, really probably not where you want to be. They're very interesting with their articles there. Yeah. Oh, I put it in the scroller, I believe, down below. They made comments about that PG&E energy company, saying how this bankruptcy is actually a really good thing for shareholders. I don't go there with that sort of thing, but that's what they said. Yeah, a lot of people making their gold comments or gold trades ahead of the Fed. That was the second worst performing area of the market last week, just because it had a good run. It's not that gold's bad. It's not that the gold miners or junior gold miners or anybody that you look at, they're not bad. It's just they had such an impressive run. It's like corn and wheat. Right? I happen to just be looking at corn and wheat this weekend because there were some comments a while back. I believe Bruce was asking at some point about the possibility of a big run, and we looked at it and said, well, it's kind of already had a run here. You kind of want to be careful. Corn and wheat had pulled back since then. So when you look at something like gold miners, even silver, right? It was just a great run. It just did really, really well. Doesn't mean that any negative moves are at this point something you should be scared of. It just means, hey, a little too far, too fast. Took a big, deep breath in, and now it's taking a break. Yep. David likes that volatility. What sector should I be in when the Fed makes their announcement there? Just interest rate sensitive stuff. If you want to play the game now, I'm not telling you to go do this. I'm just saying if you want to play the volatility game, either do that, or a lot of times the day traders just focus on the futures market. There's a very common pattern that happens when the Fed makes their sort of announcement there. Maybe we'll cover that tomorrow. The yield inversion has not technically signaled a coming recession. The fact that it inverts does not. We went through this at the time. It doesn't automatically do that. They got it all wrong when they did that. We went over all the studies and everything, and even there was a couple guys on there that were on Bloomberg that really drove it home. So, the effect of the interest rate cut, though, if that's the question. So the idea behind it is sort of, hey, we tightened up and we don't see this great growth continuing. The Fed is basically saying, we tightened up a little bit, we raised rates a few times, and we noticed that the economy isn't still moving at the same pace. It's moving a little bit slower. Growth has slowed down. And although that's not a bad thing, they're thinking about just backing up. Maybe we went too far too fast. Maybe we'll back up a little bit and see if we can push a little bit more growth and then hold steady there for a while. We'll see. I'm really interested to see how all of the high interest savings accounts respond, because they've been betting on higher rates. The reason why they're being so competitive and offering those higher rates is because, well, a lot of it is they're taking a little bit of a loss on the front side of things, but they were expecting higher rates. Now you've got all these advertisements for high rates. They're either going to A, take a higher loss to acquire a customer and hopefully sell them something else, or B, they're going to have to come out and all sort of work together to lower rates. There's a reason why Goldman Sachs is always ahead of the curve. Sorry if I missed your questions. I just happened to look down. There was a lot more than usual. What are some ways to profit from the Brexit chaos in October? Do you think they're gonna? Do you think they're gonna officially, deal or no deal, they're out? If that's the case, how do you want to profit from that? It's sort of a coin flip. This sort of thing's never really happened before in recent history to be able to go on. I would be thinking more about what do I have that I may need to protect if something like that happens. As of now, it's still up in the air. Got plenty of time to go. When will the Fed rate cut affect stocks more, before or after the announcement? Right after. Immediately right after that. In fact, if you have an older platform or a slower data feed, you'll actually notice right when they make that announcement, it freezes a little bit. You got to have a super, super strong connection if you're going to play it right then, because it gets to be a little bit crazy. Yeah. Barclays has already cut by 10 points. Yeah, I mean, you'll see that. I mean, they're a little ahead of the curve. I mean, it'll be interesting. What do you think about Kroger and where they are? Did they come off the lows? I know they hit new lows about 2 weeks ago. We were talking about that one. So it's still very much in a downtrend. There is just no excitement to the upside. Take a look at the chart. And yeah, I can put it up. When you look at the chart and you look at the downside movements here, where's all the acceleration? Remember we were just looking at AT&T a second ago. Acceleration to the downside, immediately recovered by acceleration to the upside. Here you have acceleration to the downside, and most recently, no interest to the upside. Accelerated downside, very little interest to the upside. That's one where that's where you get the phrase, catch a falling knife. People try to pick the bottom of these, and that becomes really difficult because you're relying on news in the short term. You got news or earnings that's going to do the trick for them. Right now, nobody's paying attention. They're like, there's stocks that are moving higher. They're doing great. I'll go focus on those. The stock's out of favor. It's very difficult to try to buy a bottom like that. I do like buying bottoms, but this is not one that I would just try to randomly guess. It's just not. That's a tough one. Crazy good call on, Netflix. Yeah, we've been talking about Netflix. Normal for it to take a break. Yeah, the stats are still in your favor if you're going to stick with it for that 3 or 6 month time period. But for the short-term traders, good job. If you followed along. I'm not going to say played along, because nobody should have been playing along. Get me in trouble. Vanguard turned you down for options trade. They have the full right to do that. Yep. How's one expected to, well, you might have to switch brokerage firms. Simple as that. Vanguard is known for being conservative. They're not a bad company. They're just known for being conservative. And so if someone turns you down, you just, you have to go look somewhere else. Yep. Sprint, and you're talking about the Sprint shares there. Every 9.75 shares you own of Sprint will be converted into one T-Mobile share. Is this true? Wasn't a great source. I haven't looked it up, but the bottom line is, Derek, no matter what it is, unless you plan to do something about it ahead of time, it'll be automatic. You just wake up one day and it'll be changed for you. So it's not something you have to do. Otherwise, call your broker and say, hey, what are you guys going to do about this? And they won't give you advice, but they'll be able to say, all right, on this day when the deal closes, this is what will happen, and give you a rough estimate of where you'll land. Other than that, today, these days, it just happens automatically. It's not a big deal. Yeah, we commented on Beyond Meats already. I wish them the best, but hey, man, they got to run super fast because competition's coming. Competition exists, right? You got, what was it, Nestle, you got Tyson, so, they better keep the hype going. Could you compare market volume for the summer versus the fall? Much lower in the summer, always much lower in the summer, and this summer's no exception, by the way. Very, very low volume, yep. Do you think the Fed cuts tomorrow if a quarter? It's Wednesday, actually, when they'll do the cut. And I would go with the odds on that one. Everybody's betting on a quarter-point cut. And we talked about this on Friday. A week before they make the announcement, the Fed funds rate probabilities there has never been wrong. So you got to go with those odds. We'll see. I hope they don't cut personally, but you know, they're going to do, it's not my, they know a lot more than I do. What do you think of Bed Bath & Beyond? We'll do a couple more questions and then we'll move on. So Bed Bath & Beyond, also out of favor for a while. It's not something that we've really talked about. It's the same concept of, look at, it's a steady downtrend. I mean, these are very, very difficult to pick on there. You almost, I mean, you do, in my opinion, you would rather wait for it to turn, show that there are other people interested whenever that happens, and then dive on after that. Does it really matter if you miss the bottom 10% of the rally? Like if it just bounced up today and then took a break and then you caught the next move, does it really matter in the long run? So yeah, that's pretty much my comments there. Retail as a whole also out of favor, so until you start noticing that trend change, that makes it a very tough one there. So what's the difference between me, Jazz Wealth, and the Fidelity account? So we're advisors, right? We're going to manage the investments. We don't have the trading commissions and everything. We do all the work for you, but then our goal is to help you with your net worth, everything along the way. If you're buying a house, you got a 401k plan, you're trying to figure out what to do, you get married, have a baby, things like that. If you need planning, to how much will you have in retirement, all that stuff. And then just trying to teach, right? I'm real big on teaching, so every week we do a class. That's the biggest difference. You're kind of working with a guy that when you have a question, I'll answer it no matter what it is. You call Fidelity and you say, hey, I was thinking about converting my traditional IRA to my Roth. Can I do it? There's nothing they can do. They're not going to tell you. They're going to say, if you decide to do that, here's what you do. But they just can't help you there. So a difference there. Yep. Thoughts on Tesla? I feel bad for him. You know, I mean, I really like Elon Musk. You want to cheer the guy on, but they are delivering a record number of cars and they can't make a profit. Maybe we should scale it back, right? Maybe we should like not sell so many cars, charge just a touch more for the cars and focus on making a profit for a while. It's going to hurt the stock price, but I mean, at this point, is it really worth $230 given what we just saw the other day? That's a tough one. Yep. All right, hey, I'm going to wrap it up there. I appreciate you guys watching today. We will be back tomorrow, of course, do this all over again. And that's all I have for you. So remember, if you're one of our customers, Thursday is the portfolio review. We're putting the final touches on those interesting stats and studies there. We'll cover that with you. And I appreciate everybody else being here. We'll see you tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interests comes before ours.